Man, I just wrote $2 million in coverage on a 20-year-old girl just a couple weeks ago, right? I mean, the sooner the better, okay? I mean, at a young age, yeah, you don't need a ton of extra death benefit if you don't have, when I say a young age, if you don't have kids, if you don't have a mortgage, if you don't have debt, things like that. But the rate, everything is the best at that time to get, right? Because Absolutely. Even if you wait 3 or 4, 5, 6 years, whatever it is.
All right, what's up, guys? We are on episode 15 of Yellow Colored Glasses. Thanks for watching. And I want to start out with a client shout out that left us a review. And Justin H said, if you want an agent who answers the phone and gets back to you fast, this is your group. Very professional and very knowledgeable. I would highly recommend them to anyone. So thanks, Justin. We appreciate the review. If you're a customer of ours and you haven't left us a Google review, those help out a ton. So we appreciate all those. We are going to cover life insurance today. Okay,
That's
so
right.
We've done a lot of podcasts where we've brought guests on. We did one a few weeks ago where we talked about insurance rates and we kind of reviewed the market and just to kind of educate everybody on the auto and home side of things. And so today we want to just talk about life insurance, and we're going to really start basic. We're going to talk about the different kinds of life insurance, the basic need, the foundational, the reasons why you need it, and we'll just kind of get into it. And we're going to do some more on these as we go that kind of build on each other. So the whole key and the whole reason we're doing this is to explain it and hopefully show you all why you need it and why you need some sort of life insurance in your financial plan. So from that, Jake, the first thing I have written down here to talk about is just the basic need for life insurance. Okay, at the foundational level, why does anybody, whether they're young, old, wealthy, not very wealthy, why does anybody need life insurance at all?
Well, it's as simple as you're protecting one of the biggest assets, right? I mean, everybody insures their vehicles, their houses, their toys. Why do you insure those, right?
Yeah.
That's the question, is why do you insure those? Well, I insure those because if something happens, I want to make sure that they're replaced, right? Easiest way to look at that is you have life insurance to replace that person's, typically their income, right? That's going to be the first box you check. You're going to check that box to make sure that if something happens, you don't buy life insurance to make somebody rich or make a family rich. You buy life insurance to keep that retirement account or retirement plan, that entire plan that they have built out, in force there, right? Because if you have a retirement plan, one part of the plan falls out, everything collapses, right? So you have life insurance to come in, put a place back in where it's like, okay, no, you're good, you're secure. And again, that's a big time from a financial income standpoint. So
For sure, and there's so many layers to unpack with life insurance. Like, it's not just one size fits all, one simple thing. But like what you said there, and what you've always the phrase I've always heard you talk about, and the one that we preach constantly is whenever you're looking at your finances, whenever you're looking at everything across the board with where you are now, with retirement, with where you want to be, there is no financial plan
correct
without some sort of life insurance.
Correct.
It
doesn't matter what because everybody, we know when we talk to people who have totally different mindsets with everything, right? It does not matter what your mindset is. Like, in my opinion, and I think you would agree, every single scenario, every single mindset needs some sort of different types of life insurance.
Absolutely.
Realistically. And if there's somebody out there that says, no, I absolutely do not, I'm 100% self-insured or whatever it is, okay, that's great. Well, then guess what? What is the best way to transition that wealth from one generation to the next, right? If they're self-insured, that's great. You've done that. You've done that at a very high level. Okay, wonderful. How are you going to transition that that wealth to your kids, your grandkids, things like that?
For sure, and just to kind of elaborate on that, the self-insured thing that you just mentioned, that's going to be something we talk about here, later on with this, because that's the self-insured, and what that means, guys, is Self-insured means if you were to lose your life, that in your opinion or in your financial plan, that you have enough assets or have enough income coming in from other places, cash flow, to where your family or whoever would, that life insurance would be, they would no longer need it.
Correct.
And that's part of a strategy. And we're going to talk about different strategies and mindsets and all the different things that we hear on life insurance and what you should and shouldn't do. And that's part of it that we're going to touch on really here in just a few minutes. So next question. Talked about the basic need for life insurance. What age should you get life insurance?
Man, I just wrote $2 million in coverage on a 20-year-old girl just a couple weeks ago, right? I mean, there's not the sooner the better, okay? I mean, at a young age, you don't need a ton of extra death benefit if you don't have, when I say a young age, if you don't have kids, if you don't have a mortgage, if you don't have debt, things like that. But the rate, everything is the best at that time to get, right? Because even if you wait 3 or 4, 5, 6 years, whatever it is, one, there's a lot of things that can happen variables wise, right? I mean, you can get something that makes you ineligible for life insurance. That's a big deal. Or maybe you don't get that elite best rating that you possibly, could have gotten originally because you waited 3 to 4 years, and now you're paying an extra $50 a month, which is an extra $600 a year, which over 10 years is an extra $6K over 10 years?
Yeah, right? It's a lot more.
So it ends up adding up very quickly. So sooner the better. And then, like I always say as well, like really a younger person actually needs more life insurance than an older person, right?
Why?
Because again, at the very beginning, what do you have? You have more debt than someone in their 40s or 50s, ideally, right? It's not always the case, but you just bought a brand new home, right? For a normal, person, let's say they go out and buy a brand new house. They're 30 years into that house right off the bat, 30 years in debt on that house right off the bat. They got student loans, they got a brand new car, and guess what? They just had a little one, right? What's happening there? That little one is going to be, relying on them for the next at least 20 to 25 years, right? From a financial standpoint. So guess what? That's why you need more life insurance than, let's say, somebody who's 50 years old and they don't have any kids in their house and they only have like 5 years left on their home, right, on a mortgage. Or maybe they got all their other debts paid off and they just needed to get, to make sure their income is taken care of until they get to retirement, right? So that's why at a young age, there's never really a time where it's too early to get life insurance. Like as soon as you are eligible to get it, which to get a good amount, you got to be 18, get it.
Yeah, you got to be 18 to own your own policy.
Correct.
Okay.
Correct. Yep.
No, a lot of really, really good things in there. And the thing is too, and we're going to talk about the types of life insurance, but you kind of mentioned something in there, which was talking about the self-insured, of why somebody that's older maybe doesn't need the life insurance for somebody who's 20, 25, whatever. The other thing is, and this happens, this has happened twice in the last month for us, is we've written folks who are our age and they had something that they were diagnosed with 2 years ago.
Yeah.
That's made their rates, if they get approved, all right? If they get approved, it's made their rates double, all right? And these are folks who want a lot of life insurance. They need a lot of life insurance. They're newly married. They have kids. And that's the most important time, just like Jake was saying. That's when you need the most life insurance.
Yeah.
That's when you need the most death benefit to cover your family from that aspect. Not talking about generational wealth and passing stuff on. From a death benefit standpoint, the coverage that you need for your wife or for your husband or your kids to not, maybe your wife doesn't want to go to work for the next 6 months after she just lost you.
Yep.
Right? Like she should have that ability. And the other thing is, we don't preach or teach or push anything that we don't believe in and have ourselves.
Correct.
That's a very, very important thing to the first day that we were able to write insurance when we opened this office, we wrote policies on all 4 of us.
Yep. And not only that, we increased all of our coverages as well, right?
Yes.
Because we've of course, both of us, you were in life insurance about the same time I got into life insurance, right? So, we both had coverages back in early 20s, right?
Absolutely.
And that's one thing as well that really kind of got me. You had a little bit different road there, but on my side, like I kept I was like, one thing, okay, I got to start selling. I'm starting to, write life insurance and sell life insurance. Well, I got to be what you just said. I can't sell a life policy without owning it myself. I can't tell somebody to do something that I'm not currently doing myself, right? So I got myself a life insurance policy. That thing's great, it's super cheap, everything's wonderful. Then I started quoting other people in their 30s or 40s or 50s, and I started seeing their rates. I'm like, God, that's a terrible rate. I'm paying this much. Long story short, that made me want to buy life insurance at a young age because literally of the cost of it. So the younger you get, right, or the younger you are, the lower it's going to be, okay? And to take a step back on that, like, it's not like life insurance when you're in your 30s or 40s is just crazy expensive, right? It's just the younger you can get it, the more you're going to get.
And the longer you wait, the more you're increasing your chances of having something.
And you're going to have to get it at some point in time. So get it at a young age, not check that box, pay less than someone who waits 10 years ago when you could have gotten the same dang thing, 10 years ago, right? And been paying 30% less, right?
Yep, absolutely.
And then the other part, which I think is huge, is the guarantee insurability, right? I mean, even if you don't have a ton of money at a young age, like, get something in force. Get something in force. That way it's there. That way if something bad does happen, you can increase the coverage, or maybe you transfer that over into a different type of policy, whatever that is that guarantees your insurability. And I mean, maybe you explain on what that actually means, the guarantee insurability.
No, and that leads me into, I had written down here the benefits of life insurance, getting it for your kids.
Yeah. Okay.
And
that leads right into
that leads directly into that. And the reason that you want, most people, when they talk about getting life insurance for their kids, okay, and we're just being blunt here, it's if you're burying your kids, okay, which is the worst thing that a parent could ever have to do.
Yep.
All right, and they think, okay, well, I need to have enough coverage to have the funeral, all right, $15,000, $20,000. That's great, okay, and if that's what you get, that's great, you've got that in place. But if you insure, and I'll just use Macklin and Asher for example, okay? Yeah. They were 2 and 4 whenever we opened up our policies, and we did permanent policies on them that run us about $30 a month per kid. Okay, and it was
how much coverage is that?
$150,000, and it's a index universal life policy. Okay.
So you pay $30 a month
per kid
for a $150,000 policy.
Yes. Okay. Now, 2 reasons why, and $150,000 isn't a ton, but that's more than most parents probably have on their kids.
Most parents, when I personally have seen this, most parents have $25,000 to $50,000 per kid, and they're usually paying $20 to $30 a month. So if anybody's listening to this, I did not know they were that cheap on your end. Yep. So that's amazing. But anyways, go on.
And those are whole life. Those are index universal life policies, which we'll talk about the details of that stuff later on. But the key here is you said guaranteed insurability.
Yep.
I wanted to have something that was in budget for us, but I wanted it to be enough coverage for Macklin and Asher to where if one of them gets cancer, or one of them gets diagnosed with diabetes, or one of them, something happens, whether it's 2 years from now, whether they're teenagers, whatever it is, they will always have a guaranteed insurability amount of $150,000, which still in the grand scheme of things isn't a ton of money when they get older, but that's better than nothing.
Correct.
Plus, these are policies that at any point in time after they're 18 years old, I can literally pass on to them and they've got them, okay, and they own them. And because their whole life and because they're accumulating cash value, there's a lot of benefits to that part too. Mm-hmm. So it was coverage for Amanda and I if we lost one of our kids. Correct. But it was more so thinking about their future and their own life insurance needs later on is the main reason that I did it.
And one thing to add to that, which I think is really cool, is that they own the, like you said, at 18 or whatever the time you want to, if you want to transfer the ownership over, they own the policy at that time, right? So they can cash that policy out, right? If they want, that can almost be used as a graduation gift or a college, savings account, whatever you want to call it. It's got options with it, and that's the beautiful part about it as well. And you're not just killing one bird with one stone. You know what I mean? You're killing 2 birds with one stone, 2 or 3 birds with one stone, realistically. So That's the other part, and we'll go into depth with that another time. But that's another huge deal, I feel like, is you get the death benefit coverage for the kid in case something happens at a very young age. You get the guaranteed insurability, and then you also get the options with the cash built up in the policy.
Yep.
At a very, very, I mean, most people are putting $30 a month into a savings account that's earning them. Well, it's actually going probably down in value actually in 18, 20 years. So,
Yeah, and it's super tempting when we're talking about this to go down the piece of it. But that's the difference is it's tax free too.
Correct.
Okay, so it's tax free for them.
Yep.
And some of you maybe have seen our posts about like infinite banking a little bit. We've talked about it.
Yep.
And even that small policy, how many kids when they go to college they get a new car? At that point, both of those kids are going to have roughly, I don't know the exact amount, but they'll probably have between $7,500 and $10,000 of accumulated value.
Yep. At minimum.
At minimum, that if they would have went to a bank and said, "Hey, Dad, I'm going to go get a car loan," they've already got a bank set up to go get a car loan and start paying themselves back off of $30 a month for 16 years.
Yep.
So it's freaking awesome. Okay, but that we're getting it. The main thing that we're talking about right now is why we need life insurance, why it's good to get it as young as you can, why parents should look at getting it for their kids. And there's a lot of really cool things that you can set up for them besides just getting something that's only going to cover, final expenses.
Yep.
I think, I've got written down here too, just talk about different types of life insurance. So let's just start at the basics and the different types of it, and
I'll start with the term. I mean, the term is very basic, right? It's exactly what it sounds like. You have a policy in place for a certain amount of time, a term, right? I kind of compare this to like renting a home. Okay, you're renting a home. It's typically, maybe not necessarily in this market, but typically it's less than buying a home, right? So you're renting a home. You have it for 10, 20, 30 years. That rate is typically going to be fixed. It's not going to go up as you get older. It's not going to go down. It's going to stay the exact same rate. The main reason for that type of policy is what we were talking about at the beginning, is that income protector. Okay, that debt payoff. Anything from that standpoint. And the reason why I say that is because it is so inexpensive to have. I mean, you could have $2, $3, $4 million worth of coverage, and it's realistically super affordable. It's just how you justify things and where you put your money towards. I will tell you that, just to put it this way, most people, I would say under 35, could easily get $1 to $2 million worth of life insurance on a term basis for about the same amount of money that they're paying on their car insurance.
Yeah. Absolutely.
Right? I mean, for full coverage on a brand new truck.
Absolutely.
Right? Which I see a lot of people driving around brand new vehicles. You could literally, and that's not even the car payment. That's just the insurance on that vehicle. Yeah. So, very doable, right? Very, very, very doable. But yeah, that's going to be that's going to be their term. I mean, it's exactly what it sounds like. The other part with that is you get the guarantee insurability with those terms. So if something happens and you only have X amount of years to live and your term is going to expire, well, you can take that policy and you can convert it to a policy that'll last you, the rest of your life if you want. So it gives you the options. The other part, and this is something that is very cool with our policies, is that we have the extra riders built in.
Absolutely. Yep.
And I'm gonna let you talk on that one because you're really good at explaining those. But those are huge. Those are, when we're comparing policies to really any competitors, right? I mean, ours will blow them out of the water every single day. And how many times did you hear me say, whenever we switched over here and opened up the brokerage, how much I thought we would leave all of our life insurance policies with the current company we had all of ours with, and that was not the case at all. It actually did. Not only did we save extra money, but we blew the value of those policies out of the water as well, which was awesome. So, anyways, yeah, explain the riders.
Yeah, and so the easiest way on term is going to be the most coverage for the smallest amount of money.
Yep.
Okay, so
simple as that.
And if you get a 30-year term and you're 25 years old, it's taking you to 55.
Yep.
And at 55, you can either keep paying on that policy and the rates are going to go way up, or you can convert it and it's going whole. You can convert it forever. Yeah, that's my foot. Jake and I are playing footsie. So the riders, okay. So most people also with term, and let's just say this, most term policies don't pay out. Okay, most term policies that you
Statistically,
get,
they're not going to pay.
yeah, and that's, guys, that's not a bad thing. Congratulations, you're still living at 65, 70 years old, so that's good. But most people think, okay, well, the only way I'm using that death benefit is if I die, and you're not the one using it, your family is. Okay,
Right.
so let's say
take it a step back. You do not buy life insurance for yourself.
Correct.
Right? You buy life insurance for other people, for the loved ones that you have around you. So a person who says they don't need life insurance,
I'll say it, selfish.
100%.
Selfish. It's absolutely selfish.
Very selfish. It's one of the most selfish moves that anybody could make by not buying a life insurance policy. And that's just facts. Because you don't have to deal with you don't have to deal with everything after you're gone, right? You leave it to your wife, your mom, your family, your whoever that might be. So I know one for sure on my end, and this is another reason why I'm probably overinsured, worth way more dead than I am alive. But I know going to bed every night, if something does happen to me, everybody around me in my family and in any close group is going to be 100% financially taken care of.
Gosh dang, that makes me feel better.
Yeah, exactly.
No, that's true. I mean, dude.
And that's not the case. Like, I literally, I'm not saying I live a riskier life because of that, but it's like, gosh dang, man, like that is a good feeling going to bed at night knowing that if something bad does ever happen, you get into a car accident, whatever it is. We had that claim just a couple months ago. Mm-hmm. Somebody got into an accident. They had their policy in place for about 2 or 3, 4...
17 days.
17 days? Was that what it was?
They had their policy for 17 days.
Died. It was a terrible situation. I mean, $400,000 payout.
Yep.
So...
Yeah, so the riders, though. Okay, so when Jake's talking about the riders, you don't have to... There's certain situations, and there's four different types, and it's if there's a critical illness, okay, or a terminal illness, critical injury, these types of things, to where, if there's 2 out of the 6 daily things, or I guess the ability to function as a human that you do on a daily basis, if 2 out of those 6 things are limited, so like eating, dressing yourself, going to the restroom, bathing, vision is included, hearing, driving, all those things. If those things are hindered, okay, you have the access to the cash that's in the policy.
Yep.
All right. Now, obviously, those riders, the longer you're paying on the policy, the more that's going to be available to you, down the road. Mm-hmm. But that's a really, really big deal. And most life insurance companies, those things are available, but they're not available. They're add-ons.
Correct.
They're charging you an extra $8 a month for each one. All right, which adds up. Okay, so those are included with all the policies that we sell and that we write. So those are really, really good.
On the term, well, actually on everything policies, yeah.
Yep.
Okay, yeah, that's good. And I was mind blown with that because they usually do. They cost a lot. I mean, we can't necessarily sell it as like a disability policy or anything like that from a compliance standpoint, but I mean they act close to it, right? Yep. So yeah, that's a beautiful thing that I was not even aware of that we had, that was even out there in the market. So,
for sure. Okay, so we talked about term. Okay, we talked about the riders and stuff.
Talk about the whole.
So the next piece. Okay, so everybody knows that you got term policies and you got permanent policies. All right, and this is where there's been, if you have any clue or have looked at Dave Ramsey, looking at your financial planning, if you're interested in money at all, yep. you've seen a debate, okay?
Yep.
You only buy term, okay? You never buy permanent. And in my life, I've been through kind of some ups and downs with my opinions on this.
Yep.
And the opinion that I have now is there is absolutely no right way to do it.
No.
Okay? There is no one size fits all. And everybody has a different plan. Now, where it all comes into play and where none of it will work, no financial plan, it doesn't matter if you believe in investing in your Roth IRA and buying term life insurance versus investing in real estate and going into debt and leveraging that debt to make more. None of that matters if you don't have a plan and you don't stick to it.
And you can't take a blanket plan and pick and choose the things that you want to do and not completely commit to that plan.
Absolutely.
Right? It's like building a house. You can't just skip certain things that you don't want. If you're like, oh, well, I don't want to build this wall here or that wall there or whatever it is, it doesn't work like that, right? Like, you got to build the whole dang thing for it to be a complete house. Same thing with these plans, right? If you're going to have a plan, completely commit to that plan and follow it, right? Don't pick and choose. Well, I don't want to do this. I don't want to do that. I'd like this. I like this. No, it's got to be all in or all nothing, realistically. To take a step back, not all in or nothing. It's going to have to be all in, or you're not going to get the full advantages of that plan.
For sure.
That's a better way probably to put it.
And just to be clear, we are big proponents of both types. Okay, proponents of both types of life insurance. Okay, so, and we're not going to go super in depth on whole, but basically whole, it's going to cost you more money. Okay, so a $2 million term policy is going to cost way less than if you were to go get $2 million in a permanent policy.
Correct.
By a lot.
Yep.
Okay, that's an obvious thing.
Yep.
All right. It's a completely different reason that you buy a permanent policy.
It's probably what, 10x more?
Probably around there. Maybe not quite, but it's
8 to 10x depending on the age.
It's pretty close. I mean,
I'd say for somebody like our age, it's probably.
Yeah.
Let's say it's close.
It probably is. Yeah, it's probably about 10
to,
times more expensive.
Yeah, 8 to 10 times more.
Okay. So, but it's a policy that's going to last you forever as long as you continue to fund it.
Correct.
Now, everybody, if you know about permanent life insurance, whether it's whole life or whether it's an index universal life, which is what we focus most of our stuff on. All right. It's going to accumulate cash value that you have access to throughout the policy. All right. And one thing I want to be clear here on is when anybody that looks at cash value in a life insurance policy versus the accumulated value and what is there and accessible to you. So we had some technical difficulties, and that's why we're sitting next to each other now.
Yep.
But we were talking about permanent policies and having cash value and the amount of cash that you have available to you in those policies. So
Correct.
Just review, they go forever as long as you fund them, and all the cash that's being accumulated, that's growing inside that policy, either with dividends that are getting paid back if it's a whole life policy, or with interest.
Yep.
With it being an index policy, you're making money. Okay, it's growing for you, and it's growing tax free.
Yep.
All right. So the benefits of this though is that you have cash that that's available to you to borrow from yourself. Okay. And I've heard this before. They say, okay, well, you're paying interest back to, you're still paying interest on that. You are, but you're paying it back to yourself. Okay, and you're paying yourself interest versus paying
the bank
or whoever you were getting a loan from, the interest that you would have lost and never gotten back.
Correct.
And while you're doing that, your money is continuing to grow. Let's say you got $20,000 available, and you borrow 10. It's not like 10,000 is left in there and that's the only amount that's growing. You're still growing at $20,000.
Yep.
Right?
Yep. Because the life insurance company is using your basically cash value, or your the cash that you've built up in the policy is collateral.
Yep.
Right.
So there is a very, very big, I don't know, that's a big topic that we're tackling and that we are really utilizing and teaching people about, that honestly I've always known about permanent policies. I've always known about cash value and dividends and this and that, but there's so many ways that I'm learning.
Yeah.
That we're gaining knowledge about.
Well, and I think the big thing as well is that realistically, you have a term policy and you have a whole life policy, right? There's two different types of policies. Realistically, right? Now I know there's more in-depth with this or in-depth with that, but when you get into the whole life or the IULs and all that, like, it's how you structure them. It's how you engineer those policies, right? That is the determining factor with some of these arguments and debates that you see out there. And it's all about how you engineer the policy, realistically.
That's a good point.
And that's why when somebody says whole life policies are crap or term is crap, honestly, I lost all credibility for that person right there, because every situation is different and every person's need is different, and every policy realistically can be set up different.
Absolutely.
So it's as simple as that. I'm not going to sit here and say that one is better than the other because they all have their different needs all the way across the board. And I hate when people say that, I watched a video one time and this guy was like, yeah, that's, whole life policies is a scam. You know who that was?
Yeah, I do. I do. And it's one that most people, or a lot of people
respect. Yeah.
Respect.
And it's just absolutely mind blowing that, someone can say stuff like that. So anyways, it's about, there's types of policies, which is what we've talked about today. And then there is how to engineer those policies, which is stuff that we're figuring out on our end, for every situation possible out there. So
for sure.
So yeah, don't ever let somebody tell you that a term policy is dog shit, a whole life policy is a scam. If they don't know how to actually engineer those policies or how to use those the most efficient way. And you're talking to the wrong guy.
Yeah, and they're taking, like you said earlier, a blanket statement. They're taking a blanket, idea or opinion of something, and they're applying it to the entire, entire landscape of life insurance. So, and I'll be the first to admit that I've been that person before.
Well, we've gotten into things before in our early 20s, like where we just disagreed on. I was on this end, you were on that end, and I didn't know a lot about that end, and I don't know if you knew a lot about this end, and we just didn't know, and that's how you go at it. And now, as you gain more knowledge, now we can meet in the middle and say no, like there is a need for every single type that we are talking about.
So anyway, we're wrapping it up, guys. Camera just quit on us.
Yep.
But bottom line is we covered why you need life insurance, the different, what age you should get life insurance, which the answer is get it as early as you can, at least something in place early on. And then we talked a little bit about the different types of life insurance. And we're going to be talking a lot more about some of the higher level, kind of the things that we were kind of tiptoeing around a little bit or beating around the bush on or not really going super in depth with, because it's some really, really awesome strategies that we have been able to help a lot of people with, and we're helping more and more with. So thank you for listening. Sorry for the technical difficulties. We'll get that figured out. But we'll see you at episode 16.
Sounds good.
All right.